The two big stories today are Germany's trust of the U.S. as a custodian of its gold is becoming under more scrutiny. And second, probably the bigger news, generally speaking, is today is tariff day. And while that will be a fluid situation, we are in the teeth of this.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci. This is the GoldFix Market Rundown. Today, we're going to be talking about Germany's trust or waning trust of the U.S. as gold custodian. We have that story, and we'll go through it in a second. It's a relatively new story. Also, today is Liberation Day or Tariff Day, depending on how you look at it, for Donald Trump's plans to be rolled out globally. Before we get into those, let's look at the markets themselves. 10-year yields are 4.13, continuing lower, down 2. The dollar is 104.10, down 9, but steady. The S&P 500 is 55.86, down 43. Very volatile week. The VIX is 23.31, up 1.5. That's very strong. Gold is 31.119, up 5 and change, middle of the range. If you're interested in what's going on there, gold is being bought out of the gate. Zero Hedge noted that yesterday. Gold is being bought out of the gate in Asian hours, and then the rest of the day manifests as it manifests. Silver 33.74, up a little bit, up 7 cents. Copper 501, up 2. WTI 71.07, stable but down 29 cents. Natural gas 396, up 2 and change. Bitcoin 680, down 440. Palladium 986 and change, 980 for platinum. Gold, silver steady at 92, up 4, down 6, and as I just said, steady. Grains are all down uniformly, rather. Soy 10.20, down 0.5%. Corn 4.48, down about 1%, and wheat 5.43, down 90 basis points. There's a front page. That's a story we just sent out. Gold, Germany's trust of U.S. as custodian is under review. That's a post we put out to founders. That's a preview of two stories that are going to be coming out here, exclusively here. One is extended coverage or filling in the blanks on the Chinese Chinese insurance plan. And the other one is something we're going to start talking about now, and that's German gold in the U.S. And by the way, that HeartNet story, it's not about gold, but it's about the world. And gold is part of the world, and that's really what's going on. Here's the stories we put out yesterday and today. Gold, Germany's trust of U.S. We're talking about that now. GoldFix PM, that's an update on the silver squeeze, all right, and the gold expiration and delivery. 11 billion was taken. That's the bottom line. Founders AM, JPM's desk makes ready for tariff day. Founders US repatriation, we just discussed that. UBS, getting to the actual gold story. Gold ETF demand has turned a corner. UBS reiterates their strength in gold, and they will add to it, I think, after tariff day, if the tariffs actually go in. So they're 3,200 with an eye on 3,500 coming right now. ANZ Bank, China gets proactive on tariff risk. All right, so here we go, the analysis. Germany's trust of U.S. as custodian is under review. The long-standing assumption that Germany's gold reserves are safe in New York is no longer taken for granted. Political shifts in Washington, public calls for increased transparency, and broader concerns about U.S. reserve integrity are prompting parts of Berlin's political establishment to reassess the wisdom of maintaining large-scale gold holdings abroad in general. That graphic there, that's the world's gold holdings. It's a World Gold Council graph there. Germany is the red arrow. China is not really on that scale. They probably have a lot more they're not showing, but that's it. Next, Germany maintains the second largest national gold reserves globally. That graphic just showed you, behind only the United States. Approximately 1,236 metric tons, or 37% of that reserve, are reportedly stored in the vaults of the Federal Reserve Bank of New York. The original rationale, developed during the Cold War and later reinforced during the euro's formative years, was that such an arrangement allowed Germany rapid access to dollar-denominated liquidity in the event of crisis and gave geographic safety in the event of World War III breaking out. There's Germany's gold locations. 47.9% is in the Bundesbank. A lot of that was repatriated from the U.S. in 2016. The Federal Reserve Bank of New York has 36.6%. Bank of England has a little bit less than 13%. And the Bank of Paris, Bank of France, is a little under 3%, adding up to the total 3%, 100%. The assumption of everything that was the assumptions that created gold being stored in the U.S. are no longer immune to scrutiny. We have that full story. Gold, Germany's trust of the U.S. as a custodian is under review. Linked at the bottom and in the post. Moving on, today we're going to go right to geopolitics and politics. Today's tariff day is probably the bigger news story. Bloomberg reports, this is this morning, Bloomberg reports that Trump's deliberations over his plans to impose reciprocal tariffs are coming down to the wire, with his team said to be still finalizing the size and scope of the new levies he is slated to unveil on Wednesday afternoon. As a reminder, Peter Navarro said that Trump wants to raise $700 billion annually in tariff revenue. In meetings on Tuesday, Trump's team continued to hash out their options ahead of a Rose Garden event scheduled to begin as U.S. markets close at 4 p.m. on Wednesday. So the official news is probably going to come out at 4 p.m., but there will be leaks and trial balloons that come out before then. The White House has not reached a firm decision on their tariff plan, even though Trump himself said earlier in the week that he had, quote, settled on an approach. Scrolling down a little bit, this is a nice graphic. Zero Hedge has it a premium post. They're live blogging it today. This may come from a bank, I'm not sure. But it gives you an idea of where the tariffs could be. There are plenty of graphics out there. This is one of the better ones. And there's the link to it. The bottom line is markets today will be volatile. And they have been volatile all week. But markets today, if you talk to some banks, the banks that are on top of this are JP Morgan and Goldman Sachs, right? At least the American banks. The foreign banks, they're also on top of it. And they're gaming it out as to how they would react, right? So, but staying at ground zero here, Goldman Sachs thinks that the marketplace is, I think, undervaluing. They think the marketplace is not ready for bad news. How's that? And I think JP Morgan is a little bit less concerned about the immediate news item coming out. Okay, so that's it. It's the story of the day, and that's our coverage of it. Data on deck today, such as it is, factory orders are going off probably in about 10 minutes. In premium, we have a TS Lombard report, which is, again, the European version, the European perspective. And they have, we're not showing, this is a graphic that's basically a replication of the graphic that Hartnett just had out. Basically, this is U.S. tariffs throughout history. And now they're about to jump from a little bit between 2.5% and 3% to between 8% and 10%, roughly, give or take. So that's a pretty big spike, and it has implications. And what this report does is it goes through the implications. Will the tariff be passed through? Will it not? And there's a really nice graphic in there that I think is worth looking at. We break it down as well for different perspectives. Let's go to the actual charts. I want to look at a couple markets today. I want to go through all the markets in preparation for the ramifications or effects of the tariff. This is the 10-year yield 1 hour chart. Okay, these are all 1 hour charts. 10-year yields have been cratering all this week for various reasons. And economic concerns, tariffs as related to economic concerns. But the 10-year yield is telling you that the marketplace is concerned about recession or slowdown. So if you were looking at the market, each market from a perspective of recession, everything is fine, call that soft landing, and stagflation, not inflation, but stagflation. You would say recession to this. Looking at the dollar over the same time period, well, you're looking at the dollar saying we don't know anything yet. So status quo, we're going to wait. The S&P 500, well, it's stocks, right? So it could be looking at stagflation or recession. The VIX is saying we don't really know what's going on. We're just going to buy options to be careful, mostly puts. Gold is pricing in more of, well, if you want to look at it domestically and economically, gold is pricing in a more of a stagflationary situation, right? So tariffs are stagflationary. So domestically, we have inflation, the price of goods goes up, and overseas, they have recession. So that's as the world gets stagflation, right? And so gold becomes a stagflationary hedge, which is, 1986, before then, before the 86 and the 80s, that's a big deal. And on top of it, the threat of tariffs, even if he doesn't do them, keeps gold bid because, hey, if he's going to use tariffs, then we need more dollars, right? And we need more dollars to do trade, but we also need something to hedge dollars because, well, now there's confiscation of risk and sanctions. So the threat of tariffs is bullish for gold because you're signaling that you don't trust us, so we don't trust you. Silver, I would say, given the choice between looking at it as recession or stagflation, silver is it has moments, right? So one day it's ticking along with gold, even outperforming it. And we would call that, you would call that stagflation, right? And then there are days where silver down ticks hard, and then you would say, well, that's recession. It's acting more like an industrial metal or copper. The truth of it is, there's a shortage of silver. It's also being repatriated to the U.S. China's demand is pretty much insatiable, and there's a shortage of silver in China. There's a shortage of silver in the LBMA. China's actually buying. They have a shortage. They need more of it. But simultaneously, people are collecting gold for central bank buying, so silver gets sold as a hedge against that. It's one of those things that, just takes a lot of time to play out, but that's it. Copper's another confusing one. Right now, the copper market is looking at tariffs causing recession. Now, just as a quick backdrop, for anything that you're looking at on a 1 hourly chart today or the last couple days, know that for the last month, people who have needed to buy industrial commodities have been buying them faster. They've been front loading in the US, buying them in anticipation of tariffs, making the price go up. So you're kind of getting in early before the price goes up. It's that simple. So copper right now is backing off. In this little tiny snapshot, you could say fears of recession. You could also say, well, you know what? This is a little bit of a hangover because it's basically at all-time highs, and the effect of tariffs is part of that. WTI is the surprise. It's not the surprise, but WTI is the problem, okay? Whenever, I've said this before, and we're sticking by it, whenever Trump talks tariffs, or the very first time he talked tariffs, stocks dropped and oil rallied. And the next day he kind of backed off, or the nations he was talking to came to him and said, let's work this out. So higher oil and lower stocks are a problem for Trump. He has since gotten more determined or resolute in his opinion about tariffs. And as a result of that, he's stomaching lower stocks, and he's saying to people, stay the course. It's going to be fine. This is what we have to do. A little tough love, right? Oil is the same concept. He's not talking about oil, though. However, oil's up. Now, oil's up for various reasons. You could say it's tariff based. I don't think so. I think oil's up because at the oil level there are problems. So you have Russia cutting back on production. People are, the BRICS and the oil producing nations are looking at tariffs and saying, well, uh, even without revenge in their hearts, they're saying, well, if there's going to be tariffs, then there's going to be less consumption. And so we're going to reduce our supply to keep the price of oil stable. And that's legitimate economic behavior. The other reason will be, well, Putin's in negotiations with Trump. So maybe there's something else going on behind the scenes. In fact, you have seen an escalation in Trump's rhetoric towards Putin. He's no longer being the good cop to Putin. He's in the process of moving possibly to being the bad cop. And oil has reacted as such. Oil's price is a reflection of potential increase in disharmony or discord between OPEC, Russia, or OPEC Plus, and the US. That's what that is. Natural gas. Natural gas, you can't really call it anything except a market that's got seasonality involved. We're in the shoulder right now, heading into summer. And I can't really say anything constructive about that. Bitcoin, on the way down, it acted like, here's some good news. I'm not necessarily bullish on it, but on the way down, Bitcoin acted like a stock, right? Tech stock. But there are days where stocks are down and Bitcoin is holding its own or going up. So maybe it has reached a bottom in relation to its correlation with technology right now. So you can see stocks are down over 1%, and Bitcoin, which would be down 2% on a day like today, is only down 50, 60 basis points. So we'll see about that. Palladium, industrial metal, Russian industrial metal, basically. So that's why that's doing what that's doing. Platinum, tough call. I do, UBS just called for platinum at 1100. Let's see what comes of that. Gold, silver. I'm going to zoom out on this one here. I'm very violently conflicted on this, right? The gold silver ratio is being artificially kept high, right? And it's being artificially kept high. I wouldn't call it artificially. It's being kept high because central banks buy gold, they don't buy silver, okay? So silver is having a hard time tracking gold or outperforming gold to the upside like it historically normally does. And as a result, you have a strong gold-silver ratio or a weak silver relative to gold compared to previous moves. And that's manifesting. Now, this channel here, to give you like some technical perspective, I was trading this spread in 2016. And right around here, right around when when Germany got their gold repatriated, I began to realize that this is why this is going up. It's going up because central banks are buying gold or repatriating their gold, and some of the people are scrambling for it. And then COVID happened. Who could predict that? And then this happened, and I started trading this angle here again, right? And I was buying it and selling it, going both ways. But there's a channel here, another diagonal channel going up, and I'm aware of that channel, and I believe in that channel. But this thing is bothering me right now. I think the market, there's too much time spent in this area, which makes the whole thing just be going sideways. Anyway, I guess what I'm trying to say to you is the gold-silver ratio is actually where it should be given central bank demand. But when it changes, it will be an overnight thing from 92 to 80, and then from 80 to 75, which is, classic silver. And that'll happen when it happens. And I don't know. But until then, it will continue, I think, to march higher along this channel that I don't have drawn lately. Anyway, grains. I wouldn't call myself an expert on grains, but I like to say things like beans in the teens. So I hope it happens again. Corn, that's an energy play. I think it's important overseas now, growing in importance. And wheat, that has some geopolitical implications. That's a horrible chart there. Let's go to the daily. Wheat has some geopolitical implications and some other implications that I'm not really that familiar with. But that's it. Let's go back to the story here. All right. In premium, we have more information on tariffs. To sum up, the two big stories today are Germany's trust of the U.S. as a custodian of its gold is becoming under more scrutiny. And second, probably the bigger news, generally speaking, is today is tariff day. And while that will be a fluid situation, we are in the teeth of this. You can look for some finality, hopefully, at 4 o'clock when President Trump addresses the nation in the Rose Garden. I'm Vince. Have a great day.
Well, thank you to Vince for this morning's report. Sure hope you enjoyed that one at home. And I will just say I sure enjoyed watching Vince myself, and darn grateful that it's worked out with this setup that we have here. And glad to have all of you joining us every day, and hopefully it's been helpful along your journey as we watch the metals continue to rally. It certainly started last year and continuing on. And before we wrap up, we'd just like to thank First Majestic, who kindly sponsored today's show and helps to bring our gold and silver coverage to you each week. And First Majestic actually did just announce an update to their 2024 mineral reserve and mineral resource estimate, which, if you take a look through the highlights here, you can see obviously all those categories quite a bit higher with the exposure they have gotten from their deal to acquire Gatos Silver, which of course is the owner of was the owner of the Cerro Los Gatos silver mine. And you can see proven and probable mineral reserves up 45% year over year. The measured and indicated mineral resources were up 25% year over year. Inferred resources also up 23% year over year. And as of the end of last year, the proven and probable mineral reserves estimates for the company's 4 producing mines totaled 86.8 million ounces of silver, 594,000 ounces of gold, 587 million pounds of zinc, 314 million pounds of lead, and 32 million pounds of copper, for a total of 177.6 million silver equivalent ounces. And as always, the link to this full press release in the description field below. And congratulations to First Majestic on their deal to acquire Gatos Silver, especially as we have silver on the elevated side of the rally. So anyway, going to wrap up for here. Hope you're having a great day out there. Leave a comment before you go, and we will see you again tomorrow.
Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.